Assalamualaikum and hi everyone. Today we want to present about chapter 7, Winding Up. My name is Nurhayati binti Mulyadi. My metric number is 11DPA30083
Hi, my name is Nurunajwa binti Ruslan. My metric number is 11D8019F1050.
My name is Nur Iza Nabihah binti Zamari. My metric number is 11D8019F1014.
Okay, I will start about the introduction, winding up. Okay, introduction. Process in which the existence of a company is brought to an end as well as the asset of the company collected and realized. Next, I will explain about company winding up by the court. The first is the company, based on section 464 clause 1 clause A. The company might by special resolution decide that the company has been wound up by the court. Second is any creditor, based on section 464 clause 1 clause B. Based on a case, William Hartley, Ltd., a person whose company is still indebted to him at the time of the winding up application is a creditor. Third is a contributory, based on section 464 clause 1 clause C. A contributor is a person who is responsible for contributing of the company to the company asset and the event of the company being winding up. Next is the liquidator, based on section 464 clause 1 clause D. A liquidator is essentially the independent person or entity who take liquidator is to take control of all the company asset. Next is the minister, based on section 464 clause 1 clause E. The minister is a financial minister. The last is the leasing institution. In this case of the company, which is a leasing institution or a secured institution in respect of which the minister changed with the responsibility for finance and made an order under section 24 clause 1 of the Banking and the Financial Institution Act 1989, or a non-secured institution in respect of which such minister has made an order under section 93 clause 1 of the Act Bank Negara Malaysia.
Okay, I will continue the company winding up by court section 464. First, the operator of designated payment system section 464 clause 1 clause D. Second, the registrar section 464 clause 1 clause H. And the last one is the members institution section 464 clause 1 clause I. Okay, the next slide I will present about the reasonable that the company wound up. First reasonable is the substratum main object of the company no longer be achieved of the company is gone. Case Peary versus Stewart. This case is about a shipping company lost its only ship with the remaining asset £363. Minority refused the petition of winding up made by the majority shareholder. In such situation, therefore it was just and equitable that the company be wound up. Okay, second reasonable is the management is carried on in such a way that the minority is disregarded Case Ibrahimi vs Westbourne Galleries Ltd and ORS. The case is about the company consists of two shareholders, Naza and Ibrahimi, whereas both of them are the shareholder and director of the company. They were not paid any dividend but received wages for their service. Later, Nazar's son joined the company as a shareholder and director, and thus father and son control the company. They terminated Ibrahimi, which caused him loss of income. Ibrahimi made a petition to wind up the company. It was held that then, when Ibrahimi and Naza set up the company, it was on the basis that the nature of their relationship would remain the same, despite the fact with the Naza's deed was perfectly legal. It was just an equitable that the company be wound up. Okay, next, there is a deadlock in the management of the company. Case Yenichi Tobacco Co. Ltd. This case is about there are two sole shareholders and both are director of the company. Later, there were disputes in which communication was no longer made between them but through the secretary. Regardless of this, the company made substantial profits. The court decided then mutual confidence had been lost and the company should be wound up. The reasonable is the company was formed to carry out fraudulent or illegal business. Case Brinsmith, Thomas Edward and Son. This case is about the company. John Brinsmith and Son was a piano maker. However, at the same time, their three employees set up another company to manufacture and sell the pianos. It was then decided by the court that the company was formed with the purpose of committing fraud and should be wound up. Next topic is liquidator. Who is liquidator?
Who is liquidator? Alright, definition of liquidator. A liquidator refers to an officer who is specially appointed to wind up the affairs of a company when the company is closing, typical when the company is going bankrupt. Assets of a company are sold by the liquidator and the resulting funds are used to pay off the company's debts. Winding up have two ways. The first is voluntary winding up. So, power of liquidator in voluntary winding up are 11 schedule. The first is powers given in 12 schedule. Any other powers by this act: settle the list of contributories, make calls, and summon general meeting. Next, pay company debts and adjust the right of contributories. And the last, several liquidators are appointed, one or more exercise power. Next is winding up by the court. So, the power of liquidator in the winding up by the court are 12 schedule. The first is Part 1, Section 472, Companies Act 2060, powers exercisable without authority. Second, Part 2, Section 486, Companies Act 2060, power exercisable without authority. The last but not least, Section 487, the consider any direction given by the resolution of creditors or contributories in a general meeting while administering company's asset and distributing to creditors. Section 488, to pay either way and time prescribed by the rules. The money received by him or her into the bank account prescribed by the rules. or specified by the court. Section 489 to ensure the company's property is collected and used to discharge company's liabilities and to settle the list of contributories if necessary.
That's all. Thank you.